Has Bitcoin finally finished consolidating in the bottom part of our range? Is it ready to make new highs and finally push into a new range, hitting our target of 140K, or does it still have some unfinished business to the downside? Please join our Discord if you're looking for a community to talk about crypto, stocks, and finance in general. We also have a weekly live stream, and if you want to come on and say what you want to say, we will take anybody. Just join the Discord, shoot me a message, and let me know. Welcome back to my channel, everyone. I hope you had a great weekend. We're kicking off a brand new week, and there's finally something to talk about. Over the weekend, Bitcoin pushed up approximately 3%. And overall, things look okay, but there are a few key things that I need everybody to keep their eyes on because they are concerning me a little bit. I want to jump straight into the technical analysis part of this video because we got some pretty important stuff to talk about, and we need to get real because we are getting close to the end of this cycle and everything we do is very important in this point in time. So we finally got our bullish cross on our MACD. The timing played out almost perfect on this. We drew this little swoosh and we expected it to be finished up within this range, and it did. I'm kind of surprised. We've been waiting for this bullish cross ever since Bitcoin started dropping, and we got a bearish cross, and now it's finally here. But what happens next? On the MACD will give us an idea of what's coming going into the beginning of November. So what I do not want to see is a light green candle. I need to see the MACD constantly printing bigger green candles on the histogram. If we see momentum fading at all on the MACD, that is not a good sign, and that will give us an early warning that we could possibly get rejected if we try and rally up into new levels. So as long as this continues to build higher and higher and higher as we go into November, everything should be okay. Now, there's one concern with this recent pump that I can't not mention, and it's mainly the lack of volume on this pump. Look at the volume on this pump as well. It was quite lackluster. Now, I want to move from momentum to volume because volume is correlated with momentum. The more volume we get, the more bullish momentum we will get on the histogram. That's something I need to bring up, which is concerning me, which is the lack of volume on this pump. I was hoping to see some big green candles coming into this, but they could still possibly be coming, especially going into this week, because I have some news that I will bring up, and of course the Fed meeting is one of them, and we all know when the Fed cuts rates that there is a lot of volume in this market. Like I mentioned in the last video, we want to see strong volume, excitement, and confirmation, and right now the enthusiasm is just not quite there, but that could change in the next few days. So we'll keep an eye on that. It's not too big of a concern, but it's definitely a little warning sign, so we can't ignore it. Now, over the weekend, I did make a post, and I said that I was hoping that we would come down to the 102 level, and the main reason is because long liquidity is building quite rapidly, and that's not good for us, right? And another reason was because in the weekly cycle low, we are still within this timing window here. The timing window for the weekly cycle low is still another 9 days, so I still have optimism that we will come down one more time, hopefully wipe out the longs, and then continue upward to our move. But if that's not the case, then it doesn't matter at the end of the day, and the weekly cycle low will be here. And if the weekly cycle low is here and it's confirmed and the timing window is closed, okay, we're going to bring this like this. And then we know here, if we see a rejection and then we come back below this level, then we most likely are going into a bear market. That is our first early warning sign. And then, of course, we have our 50-week SMA. But you guys know about that already, and everything seems good there. So as far as I'm concerned, I'm going to keep my mind open that a possible low will come in within the next 9 days. But if not, then this is the weekly cycle low, and we are going to continue to rally. Now, of course, people can just never contain their greed. People always want more and more and more, and that is showing clearly within this liquidation heat map, because somehow We were at maybe 6 billion or something on Friday. I think we were around that range, and now we are at almost 13 billion in longs leverage. So this is not a good thing. Ideally, I want to see these longs get wiped out before we make a higher move and then move into a new range, because at this point these leverage positions, short and long, are nearly identical. They're just a couple billion away, but I'm sure it will catch up quite quickly. And this is actually just mind-boggling of how quickly and how much leverage is being used in the market. Nobody ever learns their lesson. More leverage that builds up long is more worrying to me. I just feel like the more that's building up there, it's either they're going to come back down, take away our pump, we're going to get rejected after we wipe out all this liquidity, and we're going to come back and destroy all these people. Or we're just going to pump to new highs into a new range, and then we're to come back for these people. But the fact that there's this much leverage, and if we do go to this 135, 140 region, it isn't going to last long. I'll tell you that right now. With all this long leverage, it is not going to last long, and we are going to come back down like boom, like nothing, like it never even happened. So you guys better secure your bags within this range, especially if the longs are looking like we're at 135 and we see 20 billion, 30 billion. If things start getting crazy, you guys need to be very, very careful. Now, something I want to look at is the CME Futures Gap. Because if we hit the CME Futures Gap, which is currently at approximately 10,865, if we come back here to our total liquidation, whatever, if we come back here to our liquidation map, you can clearly see that if we go to 110,858, we'd already take out approximately 3 billion in longs. So that alone would be nice. But if we come down to this 107 range or this 1089, that'd be very nice too. But if we don't come down to these levels and we just continue to stack leverage, then I most definitely think that the next high we're going to make, or next high, like just say 35 to 40 range, is when we are going to roll over into a bear market. Now, if we look at our original Pitchfork, things are still remaining the same. I am going to move this up here because time has gone on. So this would be our new target for new highs, 130. And then our target here would be moved up to approximately, let's say, 142. Now, our pitchforks are holding up great. You can see that there's a little bit of a rejection here, but it's nothing too bad. It's normal for Bitcoin to find resistance. And it's the same story on Pitchfork 3 here. We got rejected here, but our long-term targets still stand. And I'm going to grab a little price target and we'll put this right here for now. So yeah, everything looks good. I mean, we bounced off this median line. We didn't get any weekly closes below our range. We bounced off this dotted line here. We're back above. Everything is looking okay. We just need to wait, of course, like always. Now, something else that caught my eye is the S&P and Bitcoin chart overlapped on each other. We like looking at this. You can clearly see that Bitcoin and the S&P are correlated, okay? Clearly, as of this moment, they are correlated. And I do think Bitcoin is going to catch up to the S&P. So if we mark here from here, that's approximately 9%. And I still do think that the S&P is going to move higher. And Bitcoin will have to catch up more, 10%, 11%. So I still do think that alone is why Bitcoin is going to make new highs, as long as the S&P can keep its strength. And the reason the S&P is going up right now is because of, I think it's the Fed rate cuts, plus I think it's because Trump and Xi. Now, Trump and Xi are going to meet up on the 30th of October. And remember, the Fed rate cut is on the 29th. So this is really going to be a stir up of a lot of news and a lot of excitement and momentum and volume that will come into the market. And you can clearly see here that things are going good. They agreed to a framework. I think that everything is going to go well. I keep seeing Trump is going to say it's going to work out. And I think the S&P is expecting it to work out. And that's why things are going really well in regards to the S&P's price making new highs. So I still do think that this will be the catalyst that is attached to the ending of the cycle and will lead us into a strong rally into November. So overall, Momentum is looking okay, but we need more volume. Structure is holding, but there is a lot of leverage building up. There is a CME gap as well that I hope will be filled, but I still think that we are going to line after all this short-term bearish momentum is over and we get the leverage out of the way, CME gap out of the way. If we do, I still think that everything is still lining up for a very strong November. That's everything I wanted to cover today. Thanks for watching. I'll see you guys tomorrow.